Hey guys, welcome back to my channel. So this video I'm going to be going over what SMA is. So if you're new here, this is a series I'm doing in my channel where I'm just talking about different forex concepts. So today, and as of recently, I've been talking about indicators, but pretty soon I'm probably going to switch it up and talk about maybe lot size, positioning, setting your stop loss or take profits. So the SMA is one of the most popular indicators that a lot of institutional traders use, and it's been used for over decades. So why is the SMA so popular, and why is it that institutional investors use it? So according to SoFi, a simple moving average, or the SMA, is the average of what you're trading, often its closing price, over a specific period of time. It's called moving because the price always changes. As a result, chart that tracks SMA moves forward as each new data is plotted. Investors use simple moving averages and other indicators to help them get an idea of the direction a currency or indices price is moving based on previous price. While the moving average can give investors a sense of what could happen in the future, they have limitations. That is because the simple moving average reflect past data, so they only represent past trends. So pretty much, simple moving average is the average price of what you're trading, and typically the average price of the closing. So for example, what do I mean by closing? So in this candle right here, so the candle's open over here, goes as low as over here, and goes as high as over here, but it closes right here. And then for a bearish candle, it opens over here, goes as high as over here, and then closes all the way down here. So that's what I mean by closing. So the average of the closing price of each of these candles gives you the SMA. So analysts often plot simple moving averages as a line on a chart of individual data points. The line helps smooth out movements, making it easier to identify trends. So a perfect example of it would be right over here. We can see price moving down, moving up, moving down. If you zoom out even a lot more, you can see just a lot of up and down, up and down, up and down. But this simple moving average line is just clean, and it's just going in one direction pretty much. So that's pretty much what it's saying when it's talking about helping smooth out movements. So that way it's easier to read this as opposed to trying to understand what's going on in terms of price action. If the line representing the simple moving average is moving up, so for example over here, then the price is trending up. Conversely, if the SMA is moving down, then price is trending downwards, like over here for example. For long-term trends, investors typically look at SMA over 200-day period, which is what I have right here. While intermediate trends, many focus on a 50-day period. Short-term trends typically use fewer than 50-day periods. Long-term SMAs can help smooth out volatility, but they also have the biggest lag when compared to current prices. Again, because it's long-term, so it's a lot longer. So if you're trading daily and you do a 200 moving average, it's going to take the average closing price of the last 200 candles. But if you put the simple moving average on a 1 hour chart, it's going to do the closing average of the last 100 candles on the 1 hour. So that's what it means when they say long-term SMA is the biggest lag. So SoFi continues to say, though analysts use SMA to identify trends, there are still a lagging indicator. SMAs reflect events that have already taken place, making it a trend following metric. In other words, they'll also be a step behind what is happening in real time. As a result, SMAs do not predict future prices, but they can provide investors with some insight into where price may be going. So the SMA is not this golden indicator that's going to tell you when to buy, when to sell. It's not going to give you the perfect entry. It's pretty much going to be showing you what's happened in the past. So it's what a lot of people call lagging indicators, and pretty much what a lagging indicator is in the name. Indicators that lag, so they show you stuff that's already happened or stuff that's in the past and not something that's in the future. But they can be helpful because they can help let you know what the trend is happening right now. But it can also hurt you because let's say trend changes as of now, it'll be slow to react. So that's just something you gotta keep a lookout for when it comes to SMAs. So I'm gonna be using the SMAs on a 200 period. So since price is above the SMA, I'm gonna be looking to buy. So we just gotta wait for an entry. We should be good to go. Let's see. So right here, as you have entry, we have a big bullish hammer in a way, and then we have a bullish shooting star, which is a confirmation. I would probably put SL stop loss somewhere around here. Honestly, maybe even around here, mainly because right here, as you can see, there's a lot of support right here going on. There's a lot of like market price. There's just a lot of build up over here, and a lot of traffic over here. We can see it right here too. Price tried to go down, but it couldn't break that. So right here, I'm gonna think that, oh, if price doesn't break this point, then we're definitely gonna go somewhere around over here. So I'm probably gonna set my stop loss somewhere around here, but I'm also worried about this area because we also have this going on here. But I'm gonna just say I'm gonna go over here and TP over here and over at this zone right here. So let's see how this goes. Oh no. Ah! Oh, we're safe. We're safe. Wait. And there we go. So like I said earlier, there's a big congestion over here and over here as well, which is why I was really hesitant on setting my stop loss over here, and I actually wanted to go for the one that was over here instead. But as you can see, if you would have went with the safer option, which was this one over here, then we would have had a TP hit. But again, I went with the one over here. But again, that's why I'm usually worried about like build up in certain areas. So these two were a big one for me, so I would have probably put in it like lower. But overall, not a bad trade. So right now, let's look for another one. Okay, I think we might have had another one. So bullish hammer followed by a bullish engulf. Probably put my stop loss somewhere around, damn, I want to put it over here, right? But again, we have a build up over here. We have wicks, shadows struggling to break this, and then we also have again what it looks like some bearish pressure holding this down. So as you can see from this one, try to break it, couldn't. From this one as well, try to break it, couldn't. We have the same thing over here as well, so I'm not gonna put it over here because it's just too risky. Over here doesn't really help either because again, this is where we had the build up from last time. So I'm probably gonna go over here, which is again where we had last time. But TP, I'll probably put like somewhere over here. Yeah, somewhere over here or somewhere over here. So let's see how this plays out. Yep, and pretty much TP got hit. We didn't have any drawdowns, so let's see if I can get one more trade with this. Okay, let's see what day it is. Friday, Monday. So I might probably take this one over here. Stop loss probably be not gonna be over here because again, build up. We have one right here. We have one right here. We have one right here. So I'm probably going to put stop loss somewhere around here, which is a bad zone if I'm being honest. But again, if price breaks this, price break this zone, then I'm probably going to close it. And then if price hits here, it's probably going to hit my stop loss, and TP is probably going to be somewhere around here, something like that. So let's see. Okay, still consolidating. Price still consolidating. Whoa. So yeah, if price breaks this zone right here, this one right here, I'm probably gonna close because again, stop loss is over here. So let's see. Yep, pretty much price broke here. SL's over here, so I'm probably gonna close this trade because it looks like price is going after my stop loss. Yep, pretty much what I said. Pretty much and it was pretty much what happened. So once it broke this trend, I was like, if it breaks this and then it goes beneath it, it's going for the next build up or resistance zone, which is going to be right over here, and pretty much what happened. So anyways guys, thanks for watching. If you're new here, subscribe, like the video if you like it, share it to a friend you think might need it. Leave any thoughts, questions, concerns, comments down in the comment section. Let me know if you want me to make a video on moving averaging cross. I could do that as well, and I will see you guys next time. And also thank you for watching.